How do you view the regulatory challenge of providing those same levels of appropriate customer protection in an environment in which, at least in my view, the market's moving faster than government can keep up? So, Jason, just to set table stakes, um, you know, the Canadian and US marketplaces are very different. The regulatory environments are also very different and unique. How are these issues being deployed, but also contemplated in Canada?
Well, the Canadian regulators have a reputation. We all know that the Canadian banking industry is highly regulated. Um, and for the most part, it serves a good purpose. For example, in the most recent global financial crisis that started in 2008, not a single Canadian bank failed for capital reasons. Well, Canadian banks have failed for other reasons, but not for capital. That's because the regulators simply said you need to have this much capital ratio. And the ratio varies for federally regulated banks versus credit unions. And I work for a credit union. We actually have even a higher capital ratio that's required. So you can say the regulation is pretty tight, but at times it does serve a good purpose. Now, coming back to, as a practitioner, how do we work in this highly regulated environment? Based on my experience, I think we've learned maybe two ways to tackle the situation. Advocacy and a voice from the industry is definitely key. The regulators and sometimes the media pay more attention to bad news. And sometimes the media might really magnify the impact of one incident that might be isolated. And whenever there's a privacy breach, for example, data breach or hacker incidents, you see that in all over the news. But the root causes might really be different, and they don't. These incidents don't always point to something broken in the controls and in the risk management in the organizations. So the voice is definitely important from the industry to let the regulators understand that if an incident is one-off, it may not be truly representative of a systematic issue, and the regulators need to also look at the good things that the financial institutions have done. So that's number one. The second thing I wanted to point out would just be this concept that we call right-sized regulations. So also, it takes us to constantly be talking to our regulators, asking them to pay maybe more attention to principles and intentions and be less prescriptive. Now, in case you didn't know how the Canadian banking industry and what the players are, how the industry is not a level playing field, there's about 270 credit unions. And all of these credit unions combined, the asset size is still a fraction of the asset of the largest bank, the Royal Bank of Canada. And the five major banks dominate more than 80% of the banking business in the country. Now, there are fast rising fintechs also, but still, I think there's maybe some time before we see that they take over the market share. So when it comes to then risk and compliance issues, if I look at one of the five major banks, their risk and compliance team could probably just be bigger than the entire workforce at Synergy. So if the regulators are equally prescriptive on any particular thing, then the pressure will be unfair and sometimes just unbearable for us. So, our voice has always been that the regulators need to look at what's appropriate for each organization and maybe just stay on the principle side, stay on intentions, and be less prescriptive.